gold as an investment sucks. I told that last guy, that young man before the break, get rid of his gold, don't buy gold.
The Peter Schiff Show.
Well, today, on Tuesday, August 4th, the price of gold, spot gold, finally traded above $2,000 per ounce for the first time in history.
One of those guys is a guy named Peter Schiff, and Peter and I have been notoriously at opposite ends of things because I am just not a glass half empty guy. I'm not a scarcity guy. I am not going to be, during my lifetime, you can mark it down, I will not be predicting the end of the world.
Most people are going to get wiped out with the inflation tax. I mean, all of this government is not free, right? This incredible increase in the size of government is going to cost somebody. Somebody has to pay the bills for all the bailouts and all the stimulus. And if we're not raising taxes, then how are we doing it? We're financing it through inflation. And that doesn't mean we get it for free. It just means that anybody who is foolish enough to hold US dollars, either in savings or in the form of bonds or other fixed income investments, or even any income-oriented investments where the income is US dollars, you are going to suffer. And if you have a job and you're getting paid dollars, you're going to suffer. So what you got to do to mitigate the damage, right, your share of that inflation tax, is before the dollar collapses, get rid of your dollars and use them to accumulate real money, gold and silver.
What's up?
My dad has gotten done reading this book called Crash Proof. I don't know if you're familiar with it, by Peter Schiff.
By who?
Peter Schiff?
No.
No. It's one that they've been talking about on talk radio a lot. Anyway, this guy has got my dad convinced that the stock market crash is imminent.
I'll try to be nice.
Okay.
I think it's absolutely ludicrous.
Okay.
Absolutely ludicrous. But there is no indication sufficient out there for this kook's kid, who's probably a kook too, to say this. The market is probably 100 times more sophisticated and complicated now than it was in 1929. So this man is, these people that predict these things, they really, honestly, are typically very uneducated, and they're doomsayers. I don't own any gold. I'm not going to buy any gold. It's a dumb idea. I have all of the money that I own tied up in bank accounts at banks, guaranteed by the FDIC, invested in good growth stock mutual funds in the stock market, and in paid for real estate. And I am not moving a dime because of an idiot like Peter Schiff.
When that conversation was recorded, the Dow was over 13,000 when that radio show. But obviously, look, I listened to it at the time, and I heard about it because some people told me that Dave Ramsey had commented about me, and I actually reached out to Dave Ramsey's people after that was out to see if he wanted to have me on his program or to learn a little bit more about what I was saying and not just dismiss me as some kind of kook, which he did. And of course, I got nowhere with Dave Ramsey's people. Now that it's 2010, it's 2 years after that interview, you can see how completely absurd his statements were. That's the way the typical person thinks. I mean, he holds himself off to be an expert, but clearly that's not the case. I mean, first of all, the person who called in, it was a woman whose father had read my book, Crash Proof, and after reading my book, he wanted to sell his stocks and buy gold. Now, that wasn't the only advice in my book. I had a chapter on gold. Now, at the time, I think gold was still under $800 an ounce, and the Dow was over 13,000. Obviously, the Dow today is 10,000 and gold is 1,100. Clearly, he would have been much better off doing exactly what he wanted to do, but Dave Ramsey told his daughter that he would be an idiot to do that only idiots bought gold, that it was a stupid investment, and clearly he was wrong.
During coronavirus, gold went up. Stock market went down. Right. People are afraid because they have an emotional attachment to gold that they don't have to the other commodities that makes them think that gold is a safe place. It is not. It's not safe. It is a golden colored rock. It has no intrinsic value. except the fact that two different people are fighting over it. And that's the only thing that gives it value. The same exact thing that gives a green piece of paper with the president's face on it value. It has no intrinsic value. It's a green piece of paper. The only reason it has value is that people want it from one another and will accept it from one another. That's the only thing that gives it value. And so my friend Rabbi Lapin talks about money is spiritual in that sense, in that it is based on trust. It is not based on mathematics.
In 1971, we told everybody, we're not going to give you any real money for your dollars. It's just monopoly money now. And the dollar was marked down substantially during the 70s, but then it, kind of found a floor, and it continued to be the reserve. And that's what enabled the explosion of debt in the United States. We could create money. It's like writing checks that nobody ever cashes. How well could you live if you had a checkbook and you could write as many checks as you wanted, and you didn't even have to have any money in the bank, because nobody cashed those checks. And nobody even cared that you didn't have any money in the bank. They kept taking them, right? So we built up this whole phony economy with these bum checks. But when the dollar loses its reserve status, this whole phony economy comes tumbling down, and this has got some profound implications. But if gold is going to get remonetized, which it is going to, right, all the world's fiat currencies are going to go back to being legitimate currencies, right? Because right now you have one fiat currency backed by another fiat currency. Well, how do you back the euro with the dollar if the dollar itself is backed by nothing? Right? You have to back it with something. And central banks, and that's why they're buying. There are a lot of smart central banks that continue to buy gold. They are preparing for the day that they need that gold to give value to their paper so that they don't have a complete collapse of confidence. Because all this is based on confidence. Right? And if the confidence goes, then all the purchasing power goes. So central banks are getting ready. And so the price of gold is going to go way up. It's not just going to 2,000, it's going much higher. And you can see that if you look at all the assets, look at this global stock market, look at global GDP, look at all these other financial assets, and then look at the price of gold. And you can see that all these assets are overpriced in terms of gold. Right? Gold is a very honest way to measure asset prices. Right? You can't really measure them in dollars or euros or yen, because you don't have a stable ruler, because the currencies keep losing value, they keep creating them. But gold is very stable, and you can measure value over time in terms of ounces of gold. And you could look at the bubbles that have been blown by central banks, and there's only two ways that they can be resolved. The price of everything else comes crashing down, or the price of gold goes up. And the path of least resistance politically is for the price of gold to go up, because the alternative is, a financial crisis like 2008, only much, much worse, and with no bailouts. Now, no politicians have the stomach for that. They're not going to swallow that kind of medicine. So they're all going to turn to inflation. That's the easy way out. That's what politicians have been doing for years. The thing is, it never works, but that doesn't mean they're not going to try it. They just get backed into a corner, and they have no expedient alternative. And so we're going to have a paper collapse, and gold's going to go way up. And that's how we're going to have a monetary reset.